Hello, everyone, and welcome to the final segment that we have today on the Forest stage. We have a panel. It is a bear market survival guide and VC perspective, and we have an all-star cast. We have Jahed Momand from Cerulean Ventures, Maria Alegre from Flori Ventures, Queenie from IOSG Ventures, Muhammed Yesilhark from NOIA Capital, and it is moderated by Amos from Node Capital. So come on up. Okay, thanks.
Yeah, and you're lovely. Was that good?
Hello. Hey. Everyone. Thanks for coming and listening to us people talking. So, bear markets. It's a very big subject and something that I think will be very interesting to talk with the people here about what they think and their experience in the space. Maybe we'll start just by, very, very short introduction. Queenie, do you want to start?
Yep, sure. Hi, everyone. I'm Queenie, and I'm with IOSG Ventures. So IOSG Ventures is a crypto-native fund since 2017. So we almost cover every direction in the space, from the infrastructure, which includes like layer 1, layer 2 middleware, cross-chain solution, on-chain data platforms, privacy solutions, and all the way to the consumer side, like GameFi, DeFi, and also SocialFi. So altogether, we've already got like more than 80 portfolios. So we supported teams from pre-seed stage all the way to Series A. So we're like the long-term believer in blockchain and also decentralized economy. So no matter there are like ups and downs in the market, our door is always open for the builders. Yeah, thanks.
Hello, everyone. My name is Maria Alegre. Before being a VC, I was a founder. I started a company called Chartboost. I'm from Barcelona, but I was living in the Bay Area. And I ran that company for 10 years. We raised money from Sequoia, built a team of 150 people. We were serving game developers around the world to run their business, and sold that company last year to Zynga. And then also, when I sold the company, I wasn't the CEO anymore, and I was starting Flori Ventures, which is the fund that I run right now with 3 other partners. And we are a seed fund that a Web3 impact seed fund. So we invest in early founders that are using Web3 to bring crypto to real-world use cases like emerging market fintech, climate, creator monetization. And we've made over 100 investments in the last 18 months. We typically invest 100K checks in the very early days.
Hi, everyone. My name is Muhammed. You can call me Mo. As you can see from the color of my hair, I'm German born and raised. And I now live in Dubai. I'm the CIO of NOIA. NOIA is a fund Luxembourg-based. We have 2 offices, Brussels and Dubai. And we are 4 founders, very similar to Maria. And we have 106 European family offices invested with us as LPs. And I'm the chief investment officer. We have a hybrid model. We do VC and public, meaning liquid and illiquid within the same fund.
Hi, I'm Jahed. I run Cerulean Ventures with my partner, Matthew Stotts. We run a small fund that's focused on infrastructure from the perspective of inter-blockchain and climate. And we just had our first close. I'm the youngest VC up here, I think. So thank you for inviting me. And before this, I was a former founder out of 500 startups with the company Magalix. We recently sold that. And so we're really looking at being at the earliest stages, building companies, and also really making sure that they have an impact on climate.
All right. Very quickly, myself. I'm Amos, Meiri. Originally co-founded Colored Coins, which was the first protocol on Bitcoin for digital asset in 2012, which was actually the original, the first project for Vitalik before it started Ethereum. and then build different companies, protocols, etc. Now running Node Capital, which is technical fund, I would say, running by developers only. And we invest mostly in infrastructure, decentralized networks. That's it. All right, so we'll start. You know, what is a bear market, right? Like I'm looking at, you know, this room right now. This doesn't really look like a bear market, right? Like look at all of those people. Muhammad, like, do you wanna? What is a bear market for you?
Yeah, so there's quite a few things. I would like to bust a few myths, so to say. I mean, generally I mean, we've learned the term regen at this conference, so to say, right? Established it really firmly. But in the degen world, there's always this view that, you know, there's cycles and things go down and then everything comes back up again and then things go down and you just have to sit it out, etc. But there's actually a very useful function on coinmarketcap.com, which is a bit hidden in the background. But if you go to, on the menu, there is a function that's called historical snapshot. And I always love that because basically you can go on coinmarketcap.com, and I'm not trying to make an advert, I'm actually using CoinGecko. But on coinmarketcap.com, you basically, on the historical snapshot, you go down and you can go back in the history all the way up until 2011 or 12, I think, where basically you can choose which day you want to look at how the first page of CoinMarketCap, the landing page, looked like. And if you do that, you get surprised very, very quickly, right? So you do that for 2014, the first one is Bitcoin, there is no Ethereum, for example, right? You do that in 2016, all of a sudden something that wasn't there is now the second in the largest in the room, which is Ethereum. But there is other things that some early guys will remember, like Mate's coin, or I don't know, some, you know, some completely different, now irrelevant stuff. So what I would characterize in a bear market is, you know, one speaker just now made the point and said, like, don't sell your Bitcoin, don't sell your crypto, you know, use it to mortgage it or pawn it, etc. I'd say, like, you know, look at your portfolio very carefully to make sure that the stuff that you're holding actually will be there in the next cycle again. Because yes, there will be another cycle. Yes, we go up and down, basically. But it's not the same things that go down and up together, you know, like if you go to do the historical snapshot, that looks very different if you do the same on 1st of Jan, 15, 16, 17, 18, 19, 20, etc. So what I would say is, you know, a bear market is always a good time to just readjust, clean, look at the stuff that you've done, mistakes you've done. You know, if you have 80, 90 portfolios, we have only 13, 14 investments we have done. And we are going through our portfolio and saying, what have we done wrong, basically, right? So I think that's what I would characterize a bear market, basically.
But maybe you know, instead of like, you know, looking at the market and what you mentioned, which is one view, maybe let's talk a little bit about how does it feel. Just as an example, I'll give one example. I remember, you know, in previous bear market, I was like a little bit shy, I would not say, but when someone asked me, like, what do I do? I'm like, crypto. I'm like, you know, it was a little bit embarrassing to say, right? Because they just read a lot of bad things about it in the press, etc. But maybe, you know, Maria, I want to share a few things about how does it feels, and is what we're feeling right now is a bear market.
Yeah, and I also want to share a complementary perspective, because you're looking at this from the investor perspective, and I've lived the bear markets until now from the founder perspective, and it feels very different, because the way it feels is when the market is not helping you, like in a moment where things are going up and to the right generally in the economy, it's easier to raise, it's easier to hire, because people are willing to take risks and join a startup. And you share a vision and people like visualize that because they're excited about the future and they believe it. And now everyone is careful and a little bit scared. And also as a founder, you have to make tough decisions about how to use your cash. And it just feels, everything feels like, doesn't matter how good of a job you're doing, if the market is not supporting you, you're going against the world. And I mean, I found that very frustrating as a founder to be operating in that moment.
All right, so Quinn, this is maybe for you. So we were in the bull market, and there was so much money on the table, a lot of investments, right? Like you've seen projects that, you know, you would think that would be very hard for them to raise money because there was just so much money on the table.
Yep.
Also, the dynamics between an investor and a founder kind of like were a little bit weird, I would say, right?
Yeah.
It was, again, because there was so much money on the table. Are you feeling that something changed in that perspective?
Yes, I think quite obviously, like when it was in the bull market, like when we reach out to the project, like most of the founders will say like, oh, we are oversubscribed. But now I think most of the founders, they say like, oh, we are still looking for a lead. Yeah, that's quite different.
Yep.
Yeah. So, but we found like it's really good time for our like VCs or investors because this time we got more time to do the research and we got more time to talk to the core team to discuss about their like business model, their tech stack, their go-to-market strategies. So I think it's also enhanced the bonding between the two parties. It's really good for both of us. Yeah. And I think, as what you mentioned, like there's still a lot of money on the table, even though it's becoming like more and more difficult for maybe the later stage projects to raise more funds. But I think the early stage are not that affected. Yeah, so yeah, I think that's good.
Yeah, so to me, really, seeing a bear market is actually, when I'm reading a lot of bad news about crypto, this is kind of like, to me, very, very close to the bottom. All right, so what would you, in that environment that we're kind of like maybe feeling, a bear market, some would say, maybe we're not yet in the bottom, or, there are a lot of opinions, even among us, right? So what is your suggestions for someone who's going to raise money right now and is building a crypto project? How should he approach a VC? Maybe, Jahed, do you want to?
Yeah, definitely. I think this is like I think Maria was saying this earlier, like you could just go out there with like a vision and you can get any price you wanted. And that's actually, it's totally fine. I don't really care. I'm not saying that's good or bad. It just was the case. Now what I'm seeing is folks are coming back and saying like Queenie said, yeah, we're looking for a lead still. I would say also just like there's going to be a lot more discipline around like what is the actual route to this thing actually being useful for someone. There's a lot of people here who are building great shit at this conference, actual products that solve a real problem. You're going to see a lot of that stuff come up. There's going to be a lot less, I hope, in my opinion, token go up type stuff, right? And which I'm a big fan of that stuff. We need it. If you saw my talk yesterday, we need to have some degens convert to regens, like you said, right? We need the degens, but I think that we're going to see, to answer your original question, there's going to be a lot less hopium out there for some projects, right? So you're going to have to, it's going to have to be a bit more serious about what is the real problem the blockchain is actually solving, instead of look at the mechanism design that's going to result in a nice inflationary token that guarantees returns to investors like me, right? So like that's really, I hope you see a lot less of that.
All right. So with every cycle, right, like bull, bear, we see new trends or new markets kind of like emerge. Like just one example that I thought about yesterday was that like 2016, 15, a lot of exchanges kind of like failed, but this bear market exchanges, at least until now, don't hold me on that, kind of like hold, but a second layer, which was the lenders kind of like really, they're all dead almost, right? So, so that's, a lot of things like that happens in bear and bear market, but also a lot of new markets emerge, like, less, I would say bull run was kind of like NFTs and maybe a second generation of DeFi. In 2016, it was, stupid, but it was, for example, private blockchains, which totally dead right now, right? But every bull market it's got like its new things. So what do you think is going to be the next, I would say, cohort of, interesting things being built on our industry? Choose. You can.
We're hoping for climate, we're seeing also some interesting combinations with uncollateralized credits and climate. Just seeing a lot of innovation in that space and starting to see some early startups. Like I don't know, I can mention one we funded this month. It's looking helping fund solar panel installations in big industrial, both industrial and consumers, and financing all of that with stable coins and really making, also enabling you to pay for that electricity with the stable coins and creating a circular economy. Like there's a lot of things that can be good. Combining several of the features in the real world, I think it enables for more time for those prototypes and implementations and growth from the ground up. So in terms of direction, climate, I guess, as a general, our fund, we're excited about those implementations for real users.
Yeah, I would add to that. I think with the DeFi waves you were talking about, I think that you've kind of had this strong demonstration of proof around price discovery and liquidity for markets that don't actually do much yet, but they do some solid things really well. Lending, amazing, right? You can hop on there and get a loan like this, right? With Ethica, which I think you folks invested in, right? That's amazing. You can get an under-collateralized loan right now with 1% default rate. Amazing. I think you're going to see this move into real-world assets, hopefully, right? Because you have these proof points around the data of the entire system really showing you this thing is worth that much. And it held, right? We went through an 80% dip. No one who's actually decentralized collapsed, right? I think that's a great point. And I want to point that thing at real-world assets and financing next and see what happens, hopefully.
Actually, I want to hear this answer from all of you.
Yeah, I think it's very difficult. Obviously, you're asking for a prediction. Obviously, that's extremely difficult because all my predictions have always been wrong, basically. So I don't want to make a prediction, but I was hoping in the beginning of the year that this year would be the year of the DAOs, basically that actually working DAOs, that people are engaged, that actually, because it's a perfect application of blockchain, basically, right? Organizing communities and making sure that you can align people around the decentralized autonomous organization, etc. But obviously, the only thing we've seen so far is, DAOs that no one engages in, votes don't happen, or even gets, hostile taken over, etc., right? So, what I would say, what I hope for is what Jared basically went in the direction is more regulated security token type tokens of real-world assets coming into the DeFi world, being able to exchange. What I would love to see is a Peruvian, if there is one, oil rig being able to be exchanged to a Danish suburban flat, basically, decentrally on the blockchain, both tokenized. We haven't seen that yet. The only thing we are exchanging is one, so to say, useless no-value token to another useless no-value token, right? Ideally, I would like to have real cash flows coming from the traditional finance side being exchanged to real cash flows. And that's perfect. Imagine Ukraine would have been tokenized already, and now imagine all these people that have to flee Ukraine, they would have been able to sell their real estate on the way out, basically, to institutional buyers who are happy to take the risk at a certain price, basically, but at least they could have cleared their real estate and they could have moved with their assets to another country, basically, right? Right now they couldn't, which is why we've had to set up as a crypto community all the crypto donation structures, etc., right? But in a perfectly tokenized world with real assets being tokenized and DeFi structures, like you said, that don't go down, this would have been a perfect solution of Web3 helping the real world, basically, right? In a real world application. I hope we see this kind of stuff so that we do 10x in terms of size. Because if we don't, we're not going to do 10x in terms of size, right? We're not going to 30 trillion of market cap if we take the last peak, unless we do these kind of things, basically.
Yeah, sure. So for me, I think in terms of infrastructure, I'm quite interested in the data layer. So when we talk about Web3, we talk about ownership. So if we talk about ownership, what are the assets on chain for every user? So it's not only crypto. I think data would be the most invaluable assets for every Web3 user. So we need to make sure that the data is securely stored and truly owned by the users, and also it's easily utilized or curated by the different applications. So with more and more applications in the space, there will be more and more data. So in the whole the value chain of this data layer, there are a lot of like opportunities or a lot of room for improvements. So I'm quite interested to see like more and more projects solve solve the problems from different angles. And then, like in terms of applications, I'm quite bullish on gaming because I think it's really easy to acquire more users. If we say like our goal for the next cycle is like mass adoption, then I think like gaming is like most promising kind of application, and it's really like easy and to integrate the token economics, because as we see like from the Web2 games, they're already like very mature in-game economic system. So it's gonna be like very good seamless integration. Yeah.
That's cool. Yeah, I agree on a lot of things that you said, and to me, it's really a change in the infrastructure that decentralized applications are using today. So today, they can build a decentralized application, but in the end, kind of like connecting their RPC to a centralized server or something like that. So the whole infrastructure behind the scenes of how DeFi is running or any other application is going to change with a lot of different blockchains and protocols being built right now, I think. So it's going to be a big change. And then to me, the second thing is really NFTs, which just started to scratch. And if we're talking about mass adoption also in gaming, but in other things, I think NFTs are going to play a very big role in the next bull run. Yeah, I want to talk about something that's maybe kind of like sensitive and with investors and VCs, but I think it's interesting for people to hear. A lot of the VCs will kind of like say nothing changed, the bear market is there, but we're still deploying funds, we still act normally, the same. But in essence, we're not, right? It's like something changed. Maybe we'll talk about this, what changed. I'll start because to give you like maybe more freedom to talk openly. So for us, for example, our thesis didn't change. We believe in the same thing. We believe, in the same vision. It's going the same way. I think we're a little bit more picky, I would say right now, right? Like a little bit more picky. And maybe, we're dealing a little bit more right now with controlling the systematic risk in the ecosystem, right? Like, I think most of it kind of like over and is behind us, but there is still some systematic risk. So we're kind of like in a risk management mode, and not because we don't want to invest more. We're just dealing with a lot of things in terms of like the risk management. It takes time from us to see more deals and do more deals. So on our part, like this is what changed, I think. And now we're entering August, right? Like soon, and everyone are kind of like on vacation in capital market, etc. So to me, it's like really September is where things are going to go back to normal in a way, right? So that's on our side. I'm happy to hear from a couple of you.
If I can start on that, you passed the ball, I have to score, basically. Shameless plug. What hasn't changed on our side as NOIA is that we never tell founders what to do, and we don't claim we can tell founders what to do because we're not founder-led. None of us in the VC at NOIA Capital have founded a company before, except for one founder or one partner. But we don't claim that we know better than the founders what to do with their business or how to run their business. We just have certain very strong backgrounds, whether it's management consulting, investment banking, hedge funds, etc., where we would say we're very strong on valuation side, on finance, on controlling, business operations, etc., where we can add value if the founders are interested. But from that perspective, I would say what hasn't changed, at least, is our attitude. Because a lot of firms, when things go bad, some relationships can go sour, right? I mean, how come you're running out of cash? How, we thought you had 12 months run right.
Friendly investor.
The friendly investor becomes very quickly very unfriendly, right? So we don't have that, basically, because we never claim we have that. I wish I had Maria's experience, because if you go through that, like she said, I know how much experience that puts to someone, basically, right? But, I mean, if you don't count being number 3 employee in a hedge fund in 2004 when hedge funds started in Europe, Outside of that, I wasn't the founder. I mean, I wasn't the founder, basically. So I can't claim that I know better than a founder how to run a business, right? So, but I think that's very important. That's why I also don't say, I don't have the conversation where I say, guys, it's a bear market, let's call all our portfolio companies and tell them what they should do differently. I mean, they have 10 times more skin in the game than I have. So I'm sure they'll make sure that it doesn't blow up.
That's actually a very good point, right? Like a lot of the founders, they think that, you know, the investor put money inside. So he's like, no, but you're investing your life in that.
Yeah,
that's
exactly.
way more valuable than anything, any amount of money that someone could put in. So it's like, I think a lot of founders don't, I didn't understand it when I was a founder.
To defend the founder perspective, we don't tell founders what to do.
I didn't mean that you are. Sorry. I didn't mean that you are. I just meant I wish I had the experience.
Totally. One thing we did do is we got the founders together to share some experiences, because it's very lonely to be a founder, and sometimes you just feel that everything is going wrong for you, and understanding how others are reacting to the situation, learning from each other. A lot of our focus on the work with our founders is on creating community and connecting them with each other so that they can find resources within the network.
Amazing.
And another thing that we always tell founder is, anything we say is one point of view, and you're going to hear many points of view, and you are in charge of making your own decision.
Right.
Never enter a conversation meaning like, this is what you should do. Not at all. Like, this is one point of view, go find others.
Having said that, for very successful founders like Maria, I think a lot of founders should listen very carefully, because there is a lot to learn. I've seen this in founders, basically. There is a very specific characteristics and specific traits those founders have that are able to go the whole way, basically, right? And I think, you know, you have done, I don't know, we just met, so I don't know her, but I can see from what you described that you've done the whole way, basically, right? So, that's including the exits. So that's a very...
Just once.
Yeah, but doesn't matter. But I'm just saying that experience is must be very, very valuable, basically.
Yeah, I mean, yeah, not a lot of people talking about that. Like, for example, when I started to, you know, to look for a funding for my first company, I went to the East Coast and I pitched 57 VCs in 3 weeks. Okay, all of them said no. The 58 said yes. Okay, and that basically changed my whole life. So when someone here today, a few people kind of like pitched to me, trying to convince me with their idea, you know, I was
just gonna say no.
Exactly. No, I was basically like, I said no, but the thing is that, you know, I really first, you know, gave what I think and the things why I think it's not, it should be that or should be not, but the most important thing was that, like, encouraging that it's just one no. It's just one no. It's like, it doesn't really matter. My opinion really doesn't matter if you have the vision and this is what you believe that you want to do and you want to invest your time, and you should, you know, just keep on going. So in that environment that we are today, okay, it's very hard to be a founder in crypto.
True.
What do you recommend, like, also for, let's say, a token project that's looking for funding or looking to go, you know, public with its token or whatever, as compared, let's say, for an equity of a founder that is raising money? Is there like a difference in terms of the timing? Is something more, is it easier right now, do you think, in the market?
I don't think it's the matter of like what form, like in token or in equity, because it still depends on the business model of the project. Yeah, so I don't think it has like big difference. But if you guys want to raise for your first round or something like that, I would recommend you guys to maybe lower down the valuation a bit. It's not like for me, I'm a VC, like I'm the beneficiary, but it's true. Like also maybe cut the raise target a bit, because actually you don't need that much money to build maybe the MVP or the beta product, like to maintain your team to get to the next round. So yeah, just make sure you can run as lean as possible. Yeah, and also like if you are like looking for like expand the team a bit, I think you can consider to give like the more like the token incentive, like the future incentive instead of cash. Yeah, that could be help. Yeah.
How do you guys recommend someone who's looking to raise money in crypto and doesn't have the connections for warm intros, you know, to VCs to approach a VC? It's like, you know, all of us, I guess, like getting messages on LinkedIn, Twitter, you know, cold emails, right? But let's be honest, right? Like the things that you put the most attention for is like the warm interest that you're getting from people who you know. So let's say I'm not a person who knows other people. Like, what would be the best way to approach you? And here I really want to hear all of you answer that.
I'll throw it out first. I think I did this when I was a founder too, right? Like I went out and said, great, we're building in this market, and this is for sales, right? So sales and marketing. We're building this market. Who are the best customers? Why do I think they're the best customers? And you just do your standard spreadsheet thing, or you go in, if you're rich enough to have raised money from investors, you already have HubSpot, good for you. But like, basically, treat this like, if you're a founder, go out there and say, who would actually want to give me money for this? What aligns with their vision? Who is going to think this is actually sexy? And don't put together like Amos pitched 57 people. Like, okay, I respect that. Like maybe all 57 of those people were exactly the type of people who would put money in this, right? And I see he's nodding.
That's 100% correct.
Exactly, right? So you need to actually go out there and say, I'm building this thing. Who do I know has either a vision on their website that aligns with this or has made an investment that is actually in line with it and will give a shit about this, right? Because like you can't just go and spray and pray on LinkedIn. It's just not going to work. Like
investor he feels that from your template email, right?
Exactly. And I just have I have it loaded up. It's just a snippet. I go, thank you, not in my thesis. Good luck, right? Like because like usually it isn't. Right? It's also weird on my end because I have a weird niche thesis, so that's not your fault. But point being, like, start from there and be like, this thing that I'm building, who is going to give a shit about it, and who is going to be a good partner with me on it, and then put all those people in your list and find a way to get into their network. It's an attention economy out there, and you're fighting for the attention of, Netflix, my kid, and like walking around this beautiful city because I live here, right? So,
and two complementary things. One is use the network you do have from, from school, from friends, from other founders. Those can be recruited as advisors. Ideally, an advisor is investing $5,000 or like any small amount will make the interest that come from that advisor way more meaningful. It's very different to receive an intro from someone that knows someone than from someone that says, I invested $5,000 or I invested whatever, like I'm an angel investor. And that's one. And the second is go build your network, not just on LinkedIn, but in conferences like this one and in like either smaller groups and organize meetups. And in the end, you can go and spend time growing that network, which again can help either find direct investors or advisors that result into investors.
Yeah, actually, I think it's not that difficult to reach out the person that you want to reach out. There are so many ways, so many channels. I think more important is that how to give an efficient pitch. So I think it's always important to figure out, like you should only use one sentence to describe what you are doing and also what the pain point you are solving. Is it a true pain point? You should ask yourself several times. Is it true pain points? Yeah, and then like why you can do that, but someone else cannot. And also like how many money you want, like why you reach us, like something to impress the potential investors. Yeah, and to show like you also know the VC well, like you know why you need money from the VC, something like that, like to give an efficient pitch.
Yeah, I mean, I think, by the way, that conferences are really good places. If you're really doing the research before, I think the research part is really key. I was a total kid, had no idea what the fuck I'm doing, really.
Where did you get 50 2 meetings or 8?
I had a friend who was an EIR at a VC firm, and he kind of like he lined me up with so many meetings. So it was great. But again, another thing that was a problem is that the place where he came from, they did not invest. So that was actually a problem for us when
Right, like the intro quality was not great.
was not really great.
I have, Amos, I have 2 specific recommendations on that topic. One is definitely, like also what Queenie touched upon, get the pitch crystal clear. If you have done your slide deck, 5, 6, whatever, 15 slides you have, if you've done it in a day, in half a day, spend 2 weeks to polish it. Don't come up and say it's done, basically, right? I mean, a quality of a slide deck, and go online and see the Airbnb initial pitches, the Facebook initial pitches, the whatever's initial pitches, etc. There's everything out there from DocuSign to every listed Nasdaq company. Someone has it leaked somewhere, basically, right? But the quality of the pitch really is very important, and that doesn't come with 2 days' work. If I look at the deck, because we see so many, especially coming from an investment banking background where I was spending weeks and weeks changing colors on PowerPoint slides, basically, I have no respect for founders that send me something where I know I could have put this together in 20 minutes myself, basically, right? So I think that's the most important. So we want to see the sweat that has gone into this idea, basically from the get-go, right? So I think that's very, very important. And then the second recommendation that I have is don't try to sell your business twice. Don't try to sell me the token and then sell me the equity separately. Like everyone is trying to do that, basically. I mean, not everyone, but a lot of people are trying to do that. And then they try to convince you that they have 2 hats on, that they'll be the equity shareholder. And then when it has to come to the token economics, they will take it off and then they will basically put the token hat on, but 50% of the token income goes to the equity holders. I mean, give me a break, basically, right? I mean, it's not going to happen. I don't want to have that conversation. Basically, make it very clear. Are you token only or are you equity only?
Yeah,
but don't try to be both, basically.
That's a
right?
subject we'll talk in a second that I really want to talk about. But
it should be clear in the deck, basically, is what I'm trying to say.
I agree.
Sorry.
I think, thank you. I think that another thing that is very important is basically commitment and mental, focus. Like people think I will raise money. Yeah, I'll do it like on the way, but I'm not talking about the crazy bull market. Yeah, but in regular market, it's like it's a state of mind that you need to be when you're raising money. I'll give you just one example to a crazy thing that I've done that I'm not proud of, but I made sure that I'm on a panel at Money 2020 in Vegas. I really worked hard to be on that panel because there was one investor that I really want to raise money. He didn't really give a shit about me when we were on stage on the panel, so I stoked him on a bar, basically, and I was there like on the bar drinking with him, and we started to become friends, and in the end he invested almost $20 million in fund. But it's like the state of mind that you need to be in terms of like commitment to get what you want is very important. I've done even crazier things than that, but that's not for
Don't try that with me. I don't drink, guys. Just saying.
All right, let's talk maybe a little bit. You raised like a very interesting thing, which to me is also like I'm very allergic to that. Okay, it's like, okay, what are you optimizing for, right? Are you optimizing for your shareholders or are you optimizing for your token holders? It's like it's a totally different thing, a totally different structure. Do you want to expand on that? Because you just...
I can. I'm sure it's the same topic for others. I'm happy for Maria or others to expand on it.
Anyone else?
I think it's something that we're all facing.
What do you think like about that? Is this something that you're trying to educate entrepreneurs about it? Because yeah, a lot of people, they're like, okay, I can't raise for the token, I'll raise for the equity. It's like whatever works. What works for you, I'll give it to you, right? It's like
I had one founder in the bull market, at the peak of the bull market, it was November, where I brought this up in the first conversation. And then when you could see, he got very quickly very uncomfortable because I pointed out the conflict of interest that he already has. And he had previous investors in the equity round where he was telling me, I don't know how to handle it, but we'll kind of figure it out. And then when I pointed out to him, his response was, Yeah, but we were not sure that we would want to have NOIA on our cap table anyway. So like it was basically, I haven't told you I'm interested in, you know, so which is fine, right? But I think it's a very, very important point that I think should be very clear from the get-go, because we are all human beings, right? And whoever we meet, I believe we're meant to meet, basically. So I believe in destiny. And therefore, you know, for me, I look at things very, very simply, right? I mean, just be very clear, like be honest about what you're trying to achieve. And that way, incentives are aligned, basically, for investors.
Yeah.
And
I mean, we agree. I wouldn't have anything to add other than the fact that we agree. It creates misalignment on incentives. We've seen founders do that sometimes because they're trying to raise money from Web 2.
Can you just say, maybe some people don't understand why there is an alignment of interest?
Well, because we believe there's only value in one, either the equity or the token. And it's likely that if you launch a token, you will never IPO, and therefore your equity won't have the kind of returns that a VC is looking for. So a VC is either investing in a company that will go the Web 2 route of selling or IPOing, or it's launching a token and it has another economics in another direction. And if you're investing in both, is it because they don't believe the token's going to be successful? Like, just saying that, oh, there is some value in the company, fine, there is some value in the company, but it's not the kind of value that a VC would be looking for.
It's like you wake up in the morning and who are you serving, right? It's like who, your mental, like, where is it?
And what we recommend.
Yeah, I think I agree with all of that. The only thing I would say is, as a founder, you should definitely just give yourself the flexibility. Don't token early, right? Like you have to think about, and honestly, you should, going back to the previous point about research, there are some really top-notch, amazing tokenomics experts inside of venture funds, and some of them are publishing papers on all of this and how it works. Read their papers, send them an email, really think through what is the future tokenomics of this thing I'm doing. Do I need to do it now? Can I do it 3 years from now? Because that gives you maximal optionality, and that's what you need, like, to make sure your company can survive and maximize and optimize on all possible paths, right? So for me, it's like I completely agree on all of that. It's just I'd even inject the advice of don't do it before you have to, right? Because, and it's even easier now because we're out of this bull run, because I feel like in the last year, everyone was like, when token, right? When is it in the token word? When token, right? So just chill for a bit and think about the actual futures that you want to take advantage of.
Yeah, so for me, I think if you just start your project, you don't think too much on like whether to raise like equity or token. I think more importantly is like you understand blockchain technology well. You can utilize the advantages of this technology well in your project. It's permissionless, it's trustless, it's decentralized. Then why you need blockchain in your project? I think that's more important. Yeah.
Yeah, I agree. So we have maybe time for 1 or 2 questions. Anyone? Yeah. So people, I'll give it to you so people can hear you, okay?
Thank you. So I guess a few of us that have been going through the past 18 months in crypto, especially since DeFi summer, and have seen quite a few projects go up and then crash spectacularly, can sort of frame a pattern of integrity associated with many of the people that were behind these projects. So my question is to you as VCs, do you filter for integrity? And I understand that this is a complex question. And if so, how do you do that and what sort of techniques do you employ?
I can start, if you don't mind, Amos.
Yeah, of course. You will answer, then we'll move to another.
Okay. Yes, we do filter for integrity. It's actually the very most important filter that we have. 2 of our GPs, we have four GP owners in the firm at NOIA. 2 of us, one coming from a family business and having at a very young age managerial experience and positions, and therefore have managed and interviewed a lot of C-level suit guys, basically. And myself, you know, I was 15 years in hedge funds, have had more than 3,800 one-on-ones with CEOs and CIOs and CFOs, basically of publicly listed companies. I've actually done ex-CIA courses on body language, etc., from ex-Mossad and ex-CIA guys that have built up businesses in the US that are charging hedge funds a lot of money for you to be able to read a person's body language in a meeting, etc. With COVID, it has become a bit more difficult because you do it online, but it's the most important thing. If I don't like the founder, if I don't think there is any question, and that's why I brought this topic up of token versus equity, if you feel like even the slightest hinge of an issue with the integrity, it doesn't matter how attractive the opportunity is, because I know I won't be able to finish it anyway, basically.
All right, let's maybe just last question. Yeah.
Is this turned on? Can you hear me?
Yeah.
Okay, cool. On tokenization, and I forget the other keyword used, but it's obvious. Dr. Pippa Malmgren mentioned a few months ago, I think, on a panel about the, I would call it the end of the stock market, so to speak, around the world. As she phrased it, stocks transitioning to stakes. I'm wondering if you see that future happening and are preparing for it and what you're planning for.
Guys, choose who wants to answer.
I don't think I understood the question. I didn't hear all of it.
So,
Yeah, multinationals becoming so big that they become as important as governments, basically.
in other words, blockchain technology replacing the existing infrastructure for stock markets.
Oh, okay.
Yeah, it's a very long-term, yeah.
I mean, you already see this with some of the tokenization that's happening with on FTX and stuff like that, right? It's just about, at the end of the day, kind of like what Queenie said, if you actually have an advantage to have blockchain technology doing this, I think it's unstoppable, right? That doesn't mean it's inevitable, like it's going to happen, but like the potential is there, right? It's just really more about, did the social and political angles align around it, and do they allow it to happen? And if they don't allow it to happen, that'll be interesting.
All right, guys, we're sorry, but we don't have more time. But we're here. You can ask us anything.
Yeah,
we'll stay here, around
Stay
or
here.
outside. Find us, and you can ask us whatever you want. Okay? Sorry. Thank you, everyone. Bye bye.